Okay, welcome to another training session. Today's training will be a continuation of what we did in the previous class. Okay, and that was a continuation of what we started in the introduction, which is a detailed explanation about candlestick with big bodies. And I did a chart explanation using a bullish market. So I'll be doing the same thing, but I'll be using a bearish market to explain exactly what we did in the previous lessons. So I told us that candlestick with body shows the volume of buyers or sellers in the market per time. Okay, and I also told us that we should not jump into the market because we see a candlestick with big bodies. And I told us 3 things that we must look out for before we take a candlestick with big bodies serious. Okay, not every candlestick with big body you just see in the market you consider, because some of them can be manipulation. Okay, so that's why you must see these 3 factors. You must see them being played out clearly on the chart before you consider that candlestick with body. Now, the first one is the location. You should consider the location of the candlestick on the chart. When I mean location on the chart, I mean we should check if it's forming on a support level or on a resistance level. In the previous lessons, I explained it using a bullish market. We saw how we consider a candlestick with big body, and we saw that candlestick playing out after these 3 factors, these 3 things I told you must play out. We saw it played out in the previous lessons, and then we trigger our entry at the close of that candlestick we are considering, the one with big bodies. Now, we're going to look at this on a bearish chart, like I said. Now, if you look at your screen, you will find out that this is a bearish market, a strong bearish market. And you can see the market coming down. You can see the arrow. This is not a trend line. I'm just giving an indication on so that you see the direction of the market. Now, the first thing we must look out for is where is the candlestick forming. Now, we are considering this candle. Why are we considering this candle? Because it is forming at a resistance. Remember what I told us, that no matter the big bearish candle forming on a support, please ignore it. No matter the big bullish candle forming at resistance, please ignore it. Okay, please, that law applies to every market, but for the sake of forex, we'll stick to just forex. But everything I'm showing you throughout this course is applied to crypto and any of the financial markets. So now, the first criteria for a bearish market, it must form in a resistant level. It must form in a resistant level. Then the second criteria is that it must be in the direction of the major market movement, the trend. That's why you see I draw this arrow. The market is trending down. It's trending down. So it meets the first and the second criteria. First criteria for a bearish market, it must form close to a resistance level. Second criteria, it must be in the direction of the major trend. This is a downtrend, and this is a bearish big body candle. Then the third criteria is that there must be some level of break of structure and a clear retracement. Break of structure and a clear retracement. Now, you see, there were some level of consolidation at this point, and you can see the market breaking out, retesting before the candle formed. Okay, let me just watch. See, there's a level of breakout. There's a level of breakout. There's a level of retracement before the candle appear. So, as you can see, it meets all three criteria. If you are entering the market somewhere around here, your take profit should be somewhere around here. I always advise people to just target 1:2. 1:2. Sometimes you can target 1:3, but I always advise, or you can break even at 1:2 and allow the market to run, but don't be so greedy that you want to target 1:7 all the time. It's possible to do that, but not all the time the market will give you 1:5, 1:7. So, but many times the market will give you 1:1, 1:2. So if I'm trading this, my stop loss will just be somewhere around this level. If I'm trading from this candlestick, my stop loss will just be around this level. My take profit around this level. So this is like 1:2, 1:3, which is very, very fair. Okay, even if it's 1:1, but the only thing I will not advise, don't go below 1:1. Okay, now as you can see this chart, the market, the market played at all three factors. Resistance level, the candlestick formed after a break and retest of structure, and it's with the trend. Okay, so this is how you should trade the big body candles. This is how you should trade it. Every other thing, ignore them. Like I told us at the beginning of this course, that we should try to be specific and consistent in our approach to the market. Now, I just gave you a detailed explanation on how to trade big candlestick with body, or will I say candlestick with big bodies. I just showed you how to trade it. Forget about any other way to trade this pattern. Just stick to this and master it. I will also give a detailed explanation on how to go about the week, trading the week, the obvious week rejection candle, and the candlestick with small body. If you remember, I told us these are the three categories that we should focus on in our trading. And the good part is that these things, this candlestick plays out every day, every day, every day, every day. So we must get an opportunity to enter into the market. But for you to be consistent in your profit, you must wait for these three things I pointed at. For a bearish market, the candlestick must be forming at resistance. It must be in the same direction with the major trend, and there must be a level or some level of break and retest. Okay, now if you can stick to these three, I tell you the truth, our accuracy will be so high. Okay, I don't want to make this video too long. I will be ending the class here. So in our next lesson, we'll be looking at the second categories of candle. We are done with the first category. We'll go into the second category, that is candlestick with obvious weak rejection. So I will also do a detailed explanation on how to trade it in a bullish and in a bearish market. Then we'll move to the last category, which is the candlestick with small bodies. Now, I want us to spend time and practice this on our chart. It's not enough to just watch these lessons, watch this tutorial, and just go back home and sleep. No. Practice it, watch it over and over again until it becomes part of you. Thank you very much, and see you in the next class. Bye.